So with everything going on in the stock market right now, inflation continuing to go higher and higher, the Fed keeps on increasing rates, Voyager and Celsius declaring bankruptcy, and a recession is now more and more likely than ever, well, it made me wonder, what happens when a stock actually goes to zero? And can that even happen? And what can I do with my investments? Well, in this video, I will show you exactly what to look out for when a stock is dropping to zero, and if it does, I want you to know exactly what would happen if you had your money invested in it. You see, one of my biggest fears as an investor is to see my money be worth a lot less than what I had started investing with. Therefore, I promise you, if you actually watch this video, I will save you a ton of money from making a costly mistake. Hi, my name is Wagner. So most people think that when a company reaches $0 in stock price, that's when it goes out of business. But that's not at all reality because people place a huge importance on the price, but here's how it actually works. You see, it's the price that follows reality and the price that follows bankruptcy. The company must first declare bankruptcy before the stock can even reach $0, which never usually happens, unless you're in crypto. But right now we have multiple different big effects shocking the system at exactly the same time. And if you're looking at your investments, you might want to make sure that your portfolio is ready to weather the storm. Because make no mistake, after every major financial crash and a recession, there will be casualties. There will be dead company bodies lying around some companies, including popular household names. Companies that you could never imagine disappearing. They will all have dead bodies laying around. And many of those businesses will fully destroy themselves in some other spectacular fashion, while some will go bankrupt. Now, this has happened many times before, and it will happen again with every investment. There is always a risk of your investment going to zero, but there are a few things that you could check to try and reduce that risk for the companies that you're choosing to invest your money in. Now, for a stock to reach $0, there would need to be someone remaining to sell it to you for $0. And that does not make any sense. You would not try to sell it for free. Instead, you would cling onto it, and then instead what ends up happening is that the price just keeps going lower and lower and lower until eventually there's no more people left to buy it or sell it to. But when this happens, then the stock goes through one of the most harshest things that it could go through, and that's get delisted from an exchange. And this happens when the share price itself drops below the minimal level required to trade on that specific exchange. For example, the New York Stock Exchange has a minimal listing price requirement of $1 per share, and anything less than that will get delisted from the exchange. Another exchange, the Nasdaq, has a minimum listing price of just $4. But now here's where it gets a little complicated, because a company can declare a Chapter 7 or Chapter 11 bankruptcy. Now in the case of Chapter 7, it's total liquidation, where a corporation is forced to sell all of the assets that it owns in order to compensate financially. And now in the case of Chapter 11 bankruptcy, all a corporation has to do is just restructure itself, and the stock does not actually have to fall to zero. Instead, they send their customers a bunch of emails telling them that they can't use any other products and that their money is locked away, and that no one is able to withdraw any funds until further notice. But now if a company, let's say Voyager, survives a Chapter 11 bankruptcy, your shares can still go to $0, and that's because the most likely scenario is that it will restructure itself, issuing new shares with a new ticker symbol completely independent of the old shares that you used to own. You see, the old shares you used to hold would simply sit there and gather dust, since new investors would only buy shares of the newly organized company, thus lowering the price of the old shares down till it hurts. And speaking of going bankrupt, well, it's absolutely insanity that on July 5th, when Voyager declared Chapter 11 bankruptcy, check out what happened to the stock price. It went from 27 cents all the way down to 15 cents per share, which is also down 90% just from 1 month. But on the other hand, Voyager's cryptocurrency VGX shot up to 83 cents on July 13th from 14 cents. Before falling back down to 40 cents for a 400% gain. And that was because of the appearance of a Twitter hashtag, PumpVGX, on July 18th, as well as the information of a Telegram group called Voyager Community Recovery Channel. Now, in my opinion, I think that you're gonna see a lot more brokerages and coins that are not worth much get swallowed up into the bigger brokerages like Coinbase, and many of the other smaller ones will honestly just disappear. I do expect more and more of these bankruptcies in the coming months, And I also expect to see the same thing happen with the pandemic winners that are now losers, as well as there are many stocks that received a lot of hype and run during the pandemic. Now, some were great businesses like the Apples and the Amazons, but not many of them can sustain the growth. Now, another thing that you need to know in order to avoid investing into a company that could potentially go to zero is that you need to know how profitable that company is, which you can find under quarterly earnings reports, which can be found on many websites or even directly on the company's website. Because I want to know how much dividends they pay out and how much debt they have, which are both very fundamental things to look into to determine exactly how quickly they will increase or possibly go to zero. Now, the next problem is one that will affect many growth stocks and early stage companies. And this is the effect of long-term discounting on the share price. This one is not necessarily a killer all by itself, and it doesn't really affect the business directly, but if we hit a long recession and inflation stays too high for too long, let's say 2 to 3 years, well then any company that is expected to grow a lot over the next decade by investors and where the valuation is based on earnings in a 10-year time frame, now today those companies' valuations are going to be absolutely hammered. Some companies that I am invested in, for example Tesla, are very susceptible, and this is why both of them have seen their share price absolutely get destroyed in the last 6 months. But much like recessions are part of the business cycle, so too are companies getting swallowed up and going to zero in a downturn. And this all has to happen to weed out all the bad companies that need to die. In some cases, this allows good companies that take care of their finances and are prepared for this to show what they're really made of and come out even stronger than ever before. And that's because there's going to be less competition or because they bought up the competition for very cheap. The next sort of company that you might want to be very careful with is a cash burner. Now, I find these particularly interesting because most of the popular stocks on YouTube over the last couple of years have fallen into this category. And this is the sort of company that is spending money hand over fist and is posting huge negative operating cash flows every single quarter. But the issue here is that if you don't have a giant war chest in terms of cash on hand, then you can run out of money very, very fast. In addition to the fact that everything honestly was getting crazy, this is another reason why I don't like penny stocks. There would eventually come a day of reckoning, and now it has come. And let's actually talk about the penny stock hype and pre-revenue companies. Now, I really hope that if you bought any of these pre-revenue penny stocks, you make sure that they had tons of cash on their balance sheet, or at least they raised it from investors that bought into them during the hype run-up. Now, the next really important factor to look out for is companies that can get massively smacked in the face by inflation. And this can happen in a few different ways. And yes, inflation will affect all companies, but some are likely to get hit much harder than others, especially companies that are unable to quickly change their pricing or have pressures or government reasons or regulatory reasons as to why they can't quickly shift their pricing. Now, one example here is airlines. This could get destroyed in a recession, and it certainly happened last time around when there was a high inflation and recession overlapping. A lot of the revenue for airlines is earned well in advance of providing the actual service. And right now, when we are finding ourselves in a situation where the cost of fuel has gone up massively, services, parts, salaries, etc. going up, massively airports are increasing duties and things like that, but that flight ticket was already sold 6 months ago or 12 months ago, or even longer. Because people have been postponing because of COVID, and there are these extra costs now because you suddenly cannot fly over Russia to get to Asia and a bunch of other things like that. And the cash flow of these companies can get smashed massively if inflation continues to go higher, because the long time gap of selling the service when the inflationary pressures do not exist and you're having to deliver them can mean really, really bad news. Now, if there is anything that you should remember from this video, is that companies don't just go to zero and then that's it, game over, RIP. They still have assets, which can be real estate, cars they own, the equipment, and even their own investments, which we as investors are entitled to what happens to all that stuff. And no, I'm not a licensed professional, so this was all my opinion, but if I wanted to avoid holding a stock that's gonna be worth $0, the most important thing that I would use first would be my common sense and watch this video again. But if you'd like to get started with responsible investing, you can get up to 3 free stocks by signing up to Webull. You'll get 1 free stock up to $1,800 in value if you fund your account with $100, and you can also get up to $500 worth of free cryptocurrency if you sign up using the links in my description and comments down below. Thank you so much for watching. I will see you here on Wednesday. Until next time.